AMC is having a great day today, up almost 7%. Yet I still see a lot of negative comments. I literally made a video yesterday talking about the boom boom that is coming today. And that's exactly what happened. I put my neck out on the line to give you guys the honest translation of what the data is telling me. That's why the title of this video is something along the lines of a mega bounce possibly tomorrow, or a big move, or AMC is going to go crazy. I'm not sure exactly what the title is going to be, but that is what the data is telling me. So I want to give you guys that translation of what the data is telling me in the most honest, non-biased way possible. If you guys like that, hit the like button for me. Let me know. Consider subscribing to the channel. Let me know down below in the comment section as well. But here in this video, we're going to go over the technical breakout. We are going to go over why I think it's possible to see a mega bounce tomorrow. If you guys have not been subscribed to this channel for a while now, this week of December 17th, not to toot my own horn, but we were substantially cratering basically this whole week. And the data was there to support a mega bounce. And that's exactly what happened December 17th. We went up 19.10%, I believe another 1% in after hours. So I don't know. It might happen, might not happen. I am certainly not a financial advisor, and I would not base trades based off of what I'm saying here in this video. But I do think we are in store for some crazy price action moves to the upside. Let's dive straight into it. So first things first, the technical breakout. People are saying technicals don't matter, fundamentals don't matter, nothing matters apparently, right? I got that. But I will be the first to say that that is 100% wrong. The technicals matter, fundamentals matter, the market sentiment matters, the attention AMC gets matters, the FOMO buyers, the traders, everything matters. It's not just one thing or the other. So if you want to look at it like that, by all means, do what you guys got to do. But as far as a technical breakout is concerned, really, the things that I've been watching for is obviously this inverse head and shoulders pattern that has fully formed. Shoulder right here, head right here, another shoulder right here. And this neckline is basically the support between the two shoulders. That was at about $28.50 per share. Now, I do have the Bollinger Bands pulled up. This is the top and bottom are 2 standard deviations away from the price of the stock. Not as important. The thinner these are, the less volatility you are seeing with the stock. The wider they are, the more volatility you are seeing with the stock. But more importantly is the line in the middle. This blue line is the 20-day simple moving average. We have been riding this over the past 7 days or so, literally down to a T, and we had a clean break above this. I mean, almost a 7% break above this today. So that is indicating that the bearish reversal into a bullish uptrend has just been confirmed. Now, we also seen a very rare, very rare divergence between the price of the stock was going down and the MACD was getting more bullish. That is a divergence you do not see very often. And the MACD actually went bullish December 20th. So I have been waiting for this breakout. I knew it was coming, but then again, you can't just go out and say whatever you want. You have to have some evidence of that. But it looks like it's now actually being confirmed. After we do break above, obviously, the $33 price right here, the 200-day moving average, I would watch out for about $35 per share. It's going to be a psychological level as well as the 50-day moving average at about $34.50 as well. It is fully possible that we could go to $33 per share tomorrow. That would be a 10% move to the upside. Say $35 per share. That would be about a 20% move to the upside. It's very possible. It's statistically probably improbable, but the data is here to support it. Now, last thing I do want to go over as far as this whole technical breakout is the volume. And the volume sitting at about 30 million shares, a little bit higher than that. And people are like, this is not good because there's low volume. This is actually really good because what you want to see is low volume, a big increase to share value, right? Because if you have 30 million, 35 million, whatever the volume closes for the day, and then the next day you see 100 million shares trade hands, you're going to see a 10 to 12% move based off of that, based off of the calculation of the volume to the price action. And just December 17th, we seen a 20% move off 144 million shares that traded hands. Last 20% move that we got was back here in August 24th, we moved up 20.34%, but it took 225 million shares that traded hands. So what, 60, 70 million less shares caused the same move now. It's telling you people are actually holding on to their shares right now, and there is not as many traders in the stock. So that is a good thing. Very, very good thing. Now let's move on to this whole mega bounce, whatever you guys want to call it. I don't care what you call it. Mega bounce, just whatever it is. Gamma squeeze, who cares? Now, we're seeing in the money calls very, very low. 15,233 calls that are out of the money at 200,911. That's where it's key. This is supporting a mega bounce. Why? Because there is 200,000 calls that are out of the money and only 15,000 that are in the money. This is not even close to a 1-to-1 ratio. This is a stupidly low ratio of calls that are in the money compared to out of the money. If we take a look back at the option chain, we could see at the $29 strike, 11,000 for open interest. At the $30 strike, 17,700 for open interest. The $31 strike, 9,000. $32 strike, 9,000. $33 strike, 5,300. $34 strike, almost 20,000. $35 strike, almost 20,000 as well. So I think it's possible. You could even go to $35 per share. I'm not going to put that claim out there, but I think it is possible. Why? Why is this possible? Well, if you know how gamma squeezes work, if you know how market makers have to hedge out these contracts once they run into the money, then you would know 1 day left to expiration or that same day till expiration, you have to see instant hedging, right? So if you have a $29 or $30 call for simple math here, that means you can buy shares at $30 per share. So if this stock price is at $31 per share, you made $100 on your call. Well, if the stock starts to cross above $30 per share, the market makers, they own the back end of that contract. So they have to provide you 100 shares per contract at $30 per share. They're not going to lose money on this. So if it pops and you see that mega bounce per se, on the same day to expiration, as soon as you cross 30, they instantly have to be hedged for. We also seen this happen today with the $29 strike. If you take a look at this earlier, guys, take a look at this big volume spike that we've seen. I believe it's back here, 548,000 for volume. The 1 minute candle before that was 82,000 for volume. And why did this happen? $29 is right here. Right here. So you had to see a bunch of market makers have to buy about half of the open interest on the option chain. About 50,000 shares were purchased. And if you do take a look at the actual option chain, you can see for the $29 strike, the market makers have to fully hedge out 1.1 million shares. 90% of the back end, call it 1 million shares. They bought 500,000 shares at the $29 strike instantly. So they still have about half of that. They still have to hedge out. The $30 strike as well. If we can break out above that, same thing goes. But they'll have to hedge out 1.7 million shares instantly. Same thing for all these other strikes. So that is really what is supporting this mega bounce claim. I don't know. I don't think it's going to be 20% like it was last time, because for December 17th, we've seen a lot of calls that were out of the money. Same thing we're seeing right now. Not a lot of calls that were in the money, but you also seen a lot of puts that were in the money at the same time, and you're not seeing that for this Friday. Only 13,206 that are in the money. Out of the money puts at 77,031. Now let's move on from that. If you guys have any questions, I will personally respond to your questions, because if this plays out like this or doesn't, I don't care as much. I know people really aren't gambling on options like that, on daily options based off of what is said in these videos after market closes. So I know that's not the case. But what I want you guys to be able to do is to spot this on your own with other stocks as well. Because if eventually you're going to trade other stocks too, and you want this knowledge, like Jerome Powell says, his tool belt of tools he can basically use to combat inflation and do all these other things. His tool belt. You've heard him say that plenty of times by now, I'm sure. You also have to have your toolbox as an investor and as a trader. You have to be able to recognize these signs on your own. So that's the main objective of all of this. Like I said, I've probably said it 5 times now. I might be right, might be wrong, but that's the situation. So short interest of free float, about 16.83%. Take it with a grain of salt, 40.25%. Who knows where it's at? I don't know. I can't tell you. But the amount of shares that are sold short of about 86.37 million per Ortex estimates. Return shares 1.25 million, borrowed shares 610,000, borrowed change of negative 617.82,000. Share utilization is 77.47%. Days to cover 2.35 days to cover. So we are primed as far as this is concerned as well. Ultimately supporting the rally as the days to cover is almost at a yearly high, and there is a direct discorrelation between the price and the days to cover. Days to cover goes up, price of the stock goes down, like we have seen since a sell-off, going from about 1.61 days to cover all the way up to the high of 2.62 days to cover. And obviously, once the stock bounces, days to cover will come down, and we'll see a big increase in share value like we've seen in January and in June. Pretty straightforward, went over it a ton of times. But now I do want to focus in on a little bit of the secular rotation as well as why the fundamentals matter, because the secular rotation that we are seeing, I don't even care if you guys see my portfolio. Yeah, it's on Robinhood. I have a lot of gains, I have a lot of losses that I don't want to realize for tax purposes. But what you'll notice is a lot of these stocks are mid-cap stocks. SoFi up 12%, Teladoc up 5.66%, Lucid up 5.98%, Affirm up 7.44%, Corsair 3.36%, DraftKings 7.86%. So sure, it's a good day today. Up 8.35% in my overall portfolio. One of the smaller portfolios I have, but the easiest to show you guys. Now, it's a secular rotation into all of these stocks that are already beaten down into the ground, like AMC. But the stocks that are going to benefit the most are the ones with actually improving businesses, like AMC. The operating revenue used to be $5.5 billion. Their cost they had to pay out to make that operating revenue was about $4.5 billion. So there was a $1 billion difference after taxes, after expenses, after everything else. They would struggle to make a profit. Last time they made a profit was in 2018, and they only made $110 million. What do you notice now? The cost of revenue is substantially lower. It's only going to be about $3 billion for next year. All year of 2022, about $3 billion, where they're expected to bring in about $4.5 to $5 billion of revenue. So that means potentially they are going to make a massive profit. That's where you're going to see a lot of big money flow back into AMC stock, and justifiably so. You don't want to be short on AMC. I'd much rather be long on AMC at this current moment. But the fundamentals matter, the technicals matter, all of this information matters. So that's basically going to be all for this video. Sorry for a little bit of ranting here and there. Hopefully you guys get the gist of the video. You understand the information that is being provided to you. That's going to be all. Love and appreciate you. Thank you for watching this video. I will see you in the next one.